If you can't identify the which phase the market is currently moving in the liquidity cycle, you can't make the consistent returns in the marketplace, because 90% of the retail people will lose money because they can't differentiate between the manipulation phase and distribution phase and accumulation phase, because the market moves in three cycles basically: accumulation, manipulation, distribution. If you don't understand these three cycles, you can't make money in the stock market or forex, anything. So basically, some strategies work in the manipulation phase and some strategies work in the distribution phase. If you can't differentiate the patterns between the manipulation and distribution, you will take a lot of unnecessary losses in the marketplace. So this is the only video you need, only short and simple video you need to understand the liquidity cycle. What's the basic things? We need to understand the liquidity cycle from the higher time frame to lower time frame. From any time frame, the liquidity cycle is same. The role of the market maker is to manipulate the masses. Masses means 90% of all the traders will lose money in the markets, because always the role of the algorithm is to induce the traders and stake their positions and move the direction they want. All the time, the algorithm does this because they don't want the retail people to make money. So that's why they always try to manipulate the retail people. So in this era, in the 2024, if you are still trading the normal retail concepts, you are just small fish in the big ocean of the liquidity. If you understand the liquidity, you can just follow the market makers. Market makers are the big sharks and whales in the markets. You can just follow their tails. You can just follow their market makers tails, sharks tails, and earn lot of profits, lot of risk rewards, because the retail people can't earn a lot of money from the markets because the risk reward and everything is very slow. But if you understand these inducement patterns, at which cycle is high probable and which cycles we should stay away, then you can get lot of risk reward ratios. So basically, what is the liquidity cycle? First thing first, the liquidity cycle is the pattern used by the market maker to manipulate the masses, and when to exit their positions in profits they need the liquidity. This is where the liquidity cycle was used. So the liquidity cycle was the main important thing they can't ignore. If there is no liquidity cycle, there is no market. If there is no liquidity, there is no market. If you can't identify the liquidity, you can't make money in the stock market. So this video is for you. I will explain what is meant by liquidity cycle. The first thing the market maker should do is they should accumulate the orders. Accumulation of the orders is small tight ranges. They will deliver the price in small tight ranges. If you still think the market moves from the supply and demand, they all lied to us. They all lied to us. That's a big lie. The market moves from the algorithm because the forex daily transaction is $6 trillion. If you read the articles by CTDL banks and etc., lot of different hedge funds, you can easily understand that these financial markets are rigged because they run by the algorithm, and algorithm means it has specific timings and set of rules that should deliver the price. If you understand the enigma and how the price moves, you can at least get 80 to 90% of the accuracy. So what they will do, liquidity cycle means they will accumulate the orders, they will manipulate. So in the manipulation phase, what the normal retail minds will think, they will think there's a breakout happened and the market will gonna move up, and they pay news channels some millions of dollars to print the fake news that market is gonna go up, and they will have buy positions here. Retail fishes will have buy position here, and they will have stop losses here, and they will target 1 to 1 something. That's it. See here, lot of liquidity was taken out, and then what will happen? The price will exactly reverse like this. This is the manipulation phase and this is the distribution phase. This is how the market moves. If there is no accumulation, no money will come into the markets. The liquidity providers need to get money in order to execute their orders. That's the only thing they want. So this is the basic liquidity cycles: accumulation, manipulation, distribution. So I will tell some timings where the manipulation phase will be very high probable. So if you combine everything, you can easily get 80 to 90% accuracy. Very good strategy. You can create your own strategies with these concepts I teach you. So the first type of liquidity cycle is fake order block. So before the market reverse, the market usually moves like this: higher highs, higher losses. Let's say the market is moving in the uptrend. So many people what they know is this is the change of character. We should wait for the OB in the premium to mitigate and take the sell. Everybody will do this. 99% of the retail people will do this. So it means liquidity, because the retail people can't use common sense. They will just follow the sheeps, what the sheeps do. If one sheep is doing one thing, the another sheep will follow. So if one guy is using this retail concepts, they will teach other guys this will work, this will work. So without knowing the real mechanics of the marketplace, they will simply sell here. If you understand the real mechanics of the marketplace and how the big players can execute their orders flawlessly, so they need liquidity to execute their orders without extra slippages, because they can't execute their orders like us at any point, because if they entered at any point without liquidity, they will get lot of slippages. Slippage means they will get lot of losses. So that's why they only entered the areas of liquid areas. Liquid means like the round numbers and at the times of here, because there is lot of liquidity. Retail people liquidity will be lies here. Not even retail people, small banks, medium sized banks are also liquidity for the market makers, and also pension funds also sometimes. So the only big players in the market forex is market makers and the central banks. So these are the only, they can control the price. So the interbank price delivery algorithm will take the liquidity with huge speed and aggression. If there is a huge speed and aggression means displacement. This is what ICT talks about. When the displacement is there, you can easily sell here, and you can wait for the mitigation for extra confidence and target this whole liquidity. This is the first type of the liquidity cycle, because they are inducing the liquidity. Inducement means to make a person thinks wrong, even though it is right. You should make the person feel wrong about the thing. So they exactly do this. They will create the fake order block, fake break of the structure, and then they will sweep the liquidity, and then they will move in the real direction, because this is the mechanics of the marketplace. Even if you see the 1980 charts, this is the same mechanism they are following. Nowadays it is happening in the 1 minute and 5 seconds charts also, because the quants are very upgrading the high frequency bots and everything. At the early days, this pattern is used to be seen in the dailies and 4 hours, but nowadays even the 5 seconds, 1 second time frame, this pattern is seen because of the high frequency algorithms executing the trade. And let's move into the second type of the buildup. The second type of the buildup is the retail inducement buildup. So before the reversal, the market will develop a fake trend line. If you do, you still think the market moves from the supply and demand? It's completely bullshit. So is there any, we can't, even all retail people sold here, you can't move the forex market by a single bit. Because let's assume all the retail people's liquidity is $1 billion, let's say $1 billion at the most. If you know the whole forex daily transaction is $6.5 trillion, do you think $1 billion can change the $6.5 trillion market? It's nothing. So there's an algorithm behind the price delivery in the marketplace. So that's what the main objective of this liquidity cycle, my thing is. So they will induce the traders by the build up. So after the build up, they will make a fake sweep. This is the fake sweep, and after the fake sweep, many people will buy here. They will think the market is breaking out and the price will go up, and we will sell the market. Shoot, and we will sell the market and target another liquidity from the left. So this is the first basic things you need. So for my current students, I explained what liquidities to choose from: Asian liquidities, everything, pre-vestors, internal liquidities, sectional liquidities, everything. So and the third type of liquidity is double tops and double bottoms. So this is also very retail pattern liquidity. Not only double tops and double bottoms, you can use many retail people liquidities like falling wedge. This is the chart pattern, very important chart pattern. Induce move. So always retail trendline deception is the very important. I will make another video of the retail chart pattern deception. So they will induce the retail chart patterns. They will first make the fake chart pattern, they will induce, and then they will go. So these are the first three basic type of the liquidity cycle inducements. So there are Total three phases: accumulation phase, manipulation phase, distribution phase. Accumulation phase is fake break of the structure is the accumulation of the liquidity. Inducement is this leg is the inducement, and this whole down delivery is the distribution. And for this, the double tops or the accumulation. Accumulation is nothing but accumulation of the liquidity. So it means the gathering of the money, gathering of huge pile of cash of the retail chunks. And manipulation means to induce the retail people to take the buys, because they will think the breakout has happened with lot of volume, we should buy, we should buy. But they don't understand the mechanics of the forex market, what makes the move prices. So this is the very very important three things. And when coming into the final thing, this is the news manipulation. And when in news, CPA or FOMC or anything to move up like this, let's say shoot like this, they need liquidity. Without liquidity, they can't move the price anything. If you see any market, have you ever seen this pattern move this? Nothing, right? They will always need liquidity. So what they will do, they will induce a low and then they will go up, because if there is no liquidity, they can't push these orders, they can't execute their buy orders, because if they execute buy orders, their slippers will be here. So they will induce liquidity and then they will go. So this is the basic pattern that happens every time in the marketplace. So always, if you see the charts, you can tell which direction the news will be. Very very high, oftentimes 80 to 90% you can easily tell by looking at the higher time frame liquidities or the 1 minute liquidities even. So this is the basic understanding of the liquidity cycle. In the upcoming videos, I will show you the real chart examples. And if you wanna join my course, currently the Christmas discount is going on 30%. So if you wanna join, you can join through my WhatsApp number in the comment section. Peace, guys.
My course, this is the Discord group you are added to, and all the discussion will be here. And this is the free chart where I post every trade I took and the data collection I took, everything. And there is some section for this separate mindset, and I will recommend some books. Everything is going here. And this is about the trading psychology, because at the end of the day, the psychology is the only thing that separates the profitable traders and the unprofitable traders. And this is the VIP section. So this is the section where you video mentorship tab, where you will get it after joining my course. This is where you will get access to all the completed boot camps. So you can get a bonus which you will receive after joining my course. And this is the 5-step mental program that enables to control your emotions while trading. And this is the morning routine, everything. And I give some trading affirmations where our students will chant all this affirmation before the trading time. And these are the data collection of our age. And this is the January data collection. We are up like 2% in just 1 month, and these are all the data collections in October, 19%. I will give all the access to my students, all these data collections like wins and losses, everything. And this is September month, so you will get the data collection of my edge exactly, so that you can exactly know where to take the trades and everything, because nobody, no mentor will teach you the edge and show the losses. This is honest mentorship. If you want to join and change your life, this is the best opportunity, and take